Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce here to bless y'all with another video here on Blessed to Invest. And today I want to talk about the very simple beginning stages of trading, and that is a stop loss. A stop loss is incredibly critical in your trading. If you do not have this, you will lose. You will not be a successful trader if you don't know how to use a stop loss. So you're probably asking, what is a stop loss? So first off, before we know what a stop loss is, make sure you hit the like button on this video. Spam the like button down below. That really helps this channel out, and also sub down below for more content like this to get more content of the trading, investing information. But what is a stop loss? So a stop loss is a order that you put in the market that immediately sells your position when the price of a stock hits a certain price. So let's say we're looking at Tesla. This is TSLA. And let's draw this little line here. So let's say we bought Tesla at, let's do a little arrow here. Let's say we bought Tesla right here at $930 exactly. So we bought it right here at $930. Boom, we bought it at $930, and we're expecting this thing to go up. We want the price to go up. We're ready for it to go up. But we want to secure a loss in case it goes down. So we don't want to take all this loss down here. We don't want it to drop all the way down to 905 or 910. We don't want it to go that far. So what we do, we place an order in the market that is called a stop loss. So if and when the price gets to that level, you are immediately sold out of your position and you take the cash. So in this case, let's say we place a stop loss right here. Boom, we place a stop loss at 119, and for just example, let's say we put it at 920. So we have a $10 stop loss. So if we bought the share at $930 and it drops all the way down to $920, we will lose $10 and we'd be automatically kicked out of our position. This thing is really helpful long term and short term because you are able to walk away from your position if you need to. Like, let's say you got some chores to do, or you're going to work, or whatever the case may be, you can walk away from your position and it will automatically kick you out of the trade. So that's very helpful. Why we want to use this is for that very reason there. And on top of that, we want to manage our risk. So when we are trading, we are worried about the risk to reward of our trade. So let's say in this scenario, we are risking $10 and our goal is to make $20. So let's say we need to get this thing to $9.50. So with our risk to reward like that, we can say, okay, it drops to $9.20, we lose 10, and we're looking for a target of $9.50. So that would be our 2-to-1 ratio. So in this video, I want to explain where to put a stop loss, the correct place to put a stop loss, because I know a lot of people just want to, put a stop loss there. I'm not feeling comfortable with this particular price. So, hey, let me just put it here. I bought it at $930. I'm going to put it right here at $927. You're thinking, is that the right place? They just want to lose $3? No. So there's a correct way to put this. You see how in this position, let me remove all, let's delete that, delete this, remove. So you see in this particular example right here, we're looking at this section here. You see how there's a lot of what we call noise. We call it noise in the market. It's a lot of volatility, a lot of movement in this zone right here where the stock is going up, it's coming down, it's going up, it's going down, it's going up, it's going down. It hasn't really picked a direction. And it's kind of crazy. If you were to put a stop loss here, you're immediately going to get kicked out. So let's say I bought it at $9.25. Boom. Let's say, all right, let me use these tools here so we can actually see what's going on. Let's say I bought it at $9.25 here. Boom, we bought it at the blue line. And then we're thinking, okay, since we bought at the blue line, let's put our stop loss right here at 922 because I'm just not comfortable. I only want to, you're thinking, okay, I only want to lose $4 on this particular trade. But if you look at how this thing is trading, it is a lot of noise going on. It's bouncing back and forth, back and forth. So if you were to put a stop loss there, the chances of you getting kicked out of this particular stock is very high because it's trading in this range in this area. So what you want to do with a stop loss, trend line, what you want to do with a stop loss is put a stop loss that is far away from the noise. It avoids the noise that is going on. So in this particular scenario, if we were to buy this particular stock here, we want to put it where this particular line is, which is 920. 920, we're picking 920 because it's away from this noise. If the stock begins to trend up, we are in it and it's going up. If it were to break down, we know we are wrong and it has broken this noise that it has been creating. So that's what we want to do with our stop loss. The number one goal is to put it in a place where we are avoiding the noise, and we want to put it behind some market structure. If you haven't seen my support and resistance level, this would be a good time to go take a look at that, because as you can see, the market noise is also support and resistance levels. Here goes one of our support and resistance levels. Boom, one of our support and resistance level. Here goes another one, support and resistance level. So what you want to do with your stop loss is place it behind one of the support and resistance levels. That's the main goal of this. Put it behind some market structure, put it behind some buyers or sellers, places where if it were to break in either direction, it would begin to trend up or down. And as we can see from this particular trend right here, how it was trading in this small range right here. So we put our stop loss right below. Once it broke out, it began to trend in that direction. So that is our confirmation that it's been broken out. If it were to happen in reverse, odds are it would happen in the same way, where it would break down out of this range right here and then begin to push down. So that's what we want to do with our stop loss. We want to put it in a place that it avoids the market structure. And let me get a second example for y'all today. We're going to look at the good old SPY today. SPY was up pretty big today. Let's zoom out. Zoomed out a little too much. Okay, so if we're looking at the SPY on the day, this is a 1 minute chart. Let's say we are identifying our support and resistance levels. So we have a level right here, clear level, and we can see that is like the high of the day. We also have this low right here. We also have this level. We have this level. We have this level. We have this level here. So let's say we're looking at this stock at $450. We want to place, let's say we're deciding to get in right here. We want to place our stop loss away from the noise. So where would be a good place to put a stop loss? We could put it underneath this level because it's away from this support level, the support line right here under the noise. We could also put it right here, which will be even better. It gives us a little bit more room. We're avoiding these noise level right here. Overall, this is a shaky looking chart right here. There's a lot of bouncing going on, but the goal is to put it behind some market structure, behind some noise. And you think of it as you are having protection. Like if you're playing football, you want to be behind some of the linemen. If you're a running back playing football, for the people that know football really well, if you're a running back, you want to be behind the lineman. You want some blockers for you. So you're setting yourself up. So the resistance levels, think of the resistance level as your blocker. You want to have some type of blocker in front of you so you can continue moving forward. That's the same thing you want to do when you're placing a stop loss. Have some type of blocker in front of you, some type of market structure, some type of noise that you're behind, so you can have a good odds that you're actually going to make money in the trade. So that's what you want to do with your stop loss. Very simple. And as we can see, If you were to place a stop loss here, it begins to trend up, boop, 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 trends up, and you were to make money on that particular trade. So that's what a stop loss is for this video. That's how you create the stop loss, where to put a stop loss. You put it behind market structure. And that is what a stop loss is. It is a order that allows you to reduce the risk of your particular trade. If you have any questions, let me know down in the comment section down below. This is going to be a really quick video. I'm probably going to dive more into stop losses, different dynamic type of stop losses, position sizing, etc., in the next videos. But let me know down in the comment section if you have any questions, and also leave some comments down below so we can chop it up. Have a cool little community down below. But that's gonna wrap it up. It's been your boy, Blessed Applesauce. Stay blessed, and I'm gonna see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything